Hi, I'm Wallace. I'm the founder and CEO of Above Board Financial, and in this video, I'm going to share with you a numerical example of why many people who rely on their workplace long-term disability insurance coverage are setting themselves up for a 40% reduction in take-home pay if they go out on disability leave. And it's also a reason why, for most people, it will make a lot of sense to have a supplemental individual disability insurance policy to make sure that if you do end up navigating a significant health matter during your working life, that at least financially, that part of the equation doesn't have to be stressful. Now, I'm going to go ahead and screen share here. And if you recognize this first slide, then you might have already watched the video where I talk in more detail about the attributes of most workplace plans. We're not going to focus on that here, but instead look at a specific example where we assume an employee is making $120,000 a year, which works out to a nice round $10,000 a month. And we'll assume they have a standard workplace plan in place, covering 60% of their income and paid for by their employer. Now, on the left-hand side here, under healthy enough to work, they are making $10,000 a month. If their tax rate is 30%, they're paying out $3,000 in taxes, and their take-home pay is $7,000 a month when they're healthy enough to work. Let's contrast that with what happens if they go on disability leave and are relying only on their workplace disability benefits. And also note that most employers don't provide workplace disability benefits. So this is really geared towards folks who know they have something, and it's based on what you would typically find in a workplace plan. Now, that 60% means that their workplace disability benefit is going to be $6,000 a month. And because it was employer paid, they're going to be paying out about $1,800 a month in taxes. And that means that their take-home disability benefit will be $4,200 per month. That's a full $2,800 per month less than what they were making from back when they were healthy enough to work. That's a 40% reduction. Most people's households and lifestyles are not set up in a way where they could comfortably withstand a 40% drop in their take-home pay. And I'll note that this is assuming that this employee is not running into any problems with monthly maximums on their workplace plan and that all sources of their income are covered. Sometimes you see plans where they only cover base salary, but not bonus or additional compensation. Now, I wanted to quickly touch on what it would look like if this plan were paid for by the employee. When the employee is contributing to the cost of the plan, it means that this $1,800 would go away and the employee would receive their benefits tax-free. Now, even still, you can see that there's a $1,000 per month shortfall. That's certainly better than a 40% drop, but a 15% drop in take-home pay isn't great either. And additionally, there are other reasons why it's a really smart move to get a small policy in place, even if you don't think that the gap is that big between what you make when you're healthy enough to work and what you would get from your workplace plan. And the reason for that is that it gives you much greater flexibility in the future if you end up moving to a different employer and you want to get increase in your disability coverage in the future without having to prove that you're healthy at a future date. That could be super valuable to your future self. So if you want to get a disability insurance quote, come visit us at aboveboardfinancial.com. And if you're unsure about what your workplace benefits are, you can feel free to drop us a note with information about your workplace plan at hello@aboveboardfinancial.com. Or even if you're not sure where to get that information, just drop us a note telling us who your employer is, and we can guide you through how to get the information that you need to make a smart decision that you'll have a high degree of confidence in. We look forward to helping you.